Hey guys, Boris BK Forex. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, and pound dollar for June 25 to June 29, 2018. And the theme of the week as we're going to open up the week for June 25 is that anti-dollars came back this week. We saw final evidence of some stabilization across all the anti-dollar pairs in the majors, with the euro bouncing, dollar yen dropping, and pound dollar bouncing as the week came to a close. And I think those are the major takeaways as we begin the week in terms of where the possibilities go at the start. The levels actually remained relatively the same because we haven't really reached any kind of extremes, with the exception of the fact that dollar yen now dropped to 109 support as the 110 was clearly taken out, and 111 now is very significant resistance in the pair. For the euro, 115 is held like a solid wall, but reaching out higher still remains to be an open question, although 17 and 18 certainly within reach. And that would actually be very sort of surprising, I think, to euro bears, given all of the negative data that we've had over the last couple of weeks. But the fact that we're crawling back out on the price level suggests that we probably have more short covering to do before any kind of exhaustion kicks in. And then last but not least, cable did finally bounce on more than on hawkish BOE rate decisions, sort of the idea that perhaps we're going to get a rate hike out in July or August. But the bounce still remains relatively anemic. The 132 still very solid support here, but really, and I would actually, you know what? I think I would have to actually change this to 131 as the true support here, to be more honest. We'll take a look at the charts, and really 134 as the more serious resistance when we look at the charts. Cable is the weakest of all the bounces here and still remains kind of a broken child for the time being. Now let's take a look at the calendar events this week, and it's not really quite a lot that's on the calendar of any import. It's not likely that we're going to be driven by economic data as much more by all of the pro-trade, anti-trade flow data that we're getting on the headline basis. But on the economic front, we still have lots of stuff on the calendar that could play itself out. IFO, we're negative IFO on Monday going into the euro, but given the fact that PMI surprised to the upside and that so much bear sentiment is already baked in, unless IFO really drops sharply, I see it hardly as a potential for a downside movement in the euro. It's going to be really much more important to see what's going on in the German coalition negotiations regarding the migrant issues, and whether Merkel is genuinely in trouble as a leader of the government, or whether this is just a tempest in a teapot. U.S. home sales, on the other hand, are very likely to be negative, given the fact that we have higher rates now, and clearly, and this is, I think, a story not getting nearly as much play as it should, the real estate market, which is still a very serious component of the U.S. economy and still a big contributor in many different ways, not just in construction, but in retail sales and everything else, is rolling over. Higher rates are definitely having an impact on home buying in the U.S., and I think it's worth watching here, especially if we get negative downside surprises. Another downside surprise, a clip, let's say, of 3% to the downside, should have more of a serious pressure on dollar yen. We could see 109.50, perhaps even 109 as the week progresses. Conference board data, the New Zealand data, none of this well, sorry, we'll get to New Zealand in a little bit, but as far as the major stuff, nothing really very market moving. We have goods trade balance and durable goods, again, not a very big market moving event. Pending home sales, something that could also be a negative event for the dollar as we go forward. Then Thursday, we have CPI data out of Germany, not expected to be significantly high. Now, this actually could be interesting. One of those things that given the fact that the euro is rebounding, if we do get hotter than expected CPI data, as a result of lower euro and perhaps more inflationary pressures on the import side, that could actually provide even more fuel for a short covering rally in the euro as we go forward. And then we close out, excuse me, we close out the week with a final reading of the GDP. Again, not a big market mover. And into Friday, we look at unemployment data out of Germany, GDP data out of UK, which should be interesting, given the fact that, I'm sorry, UK economy is, certainly for the first quarter, was relatively weak. So any kind of downward revision might be mildly negative for the pound. And then finally, and this is the most important data point on the economic front, personal income, personal spending. The big bet here on a pro-dollar bet is that U.S. growth continues, U.S. income continues to grow, U.S. personal spending continues to grow. Those numbers do not look positive if they don't. Now, we're bullish, this numbers, because we had a sharp rise in average hourly earnings and retail sales have been relatively good. But if those numbers don't prove out to be as bullish as the market thinks they're going to be, that's yet another very key component to why dollar yen can't rally. So watching that data at the end of the week very carefully. Now looking onto the charts here, let's start with the euro, and here's the weekly chart. And you can see that this 115 really held like a champion on a weekly basis. And more importantly, if we can go on a daily basis, here's a daily chart, you can see that it's really made a very, very clear definitive bottom here. Friday's close was pretty good. It would have been ideal if we closed at the highs, but we almost ended at the highs. And as we are entering into the week, this type of a formation with a nice doji on Thursday certainly suggests that 117 is in view. Now, 117 to 118 becomes a much more choppier and probably a much more likely a proposition for a decent short establishment, because this negative candle from the ECB meeting still dominates the longer term downward trend. But for the near term, the trade in the euro seems to be much more to the upside than to the downside. In dollar yen, the trade is exactly the opposite. The failure at 111 is a very negative read from a price point of view. We did hold the 110s more or less, but there is every possible indication that we could have risk aversion flows that can push us all the way down to 109.50. And more importantly, if we break the 109.50, the true test is going to be the 109. Now, even if we reach 109, it's still not a fully negative trade for dollar yen. It sort of kind of just holds the very key support level that we're seeing. But it is just not a time to really want to get long dollar yen. The dollar yen trades, to me, right now, at least for the next 100 points, it seems much more likely that we hit 109 before we hit 111. So if you're going to trade momentum, it's probably the momentum to the downside that you want to take, although it's very indefinitive and inconclusive either way. And finally, here's the pound. Nice, big reversal candle off the BOE, but can't hold the highs, and that's kind of a negative structure. To me, it looks like pound still wants to chop, although any drop into the 131 area pretty much gives you a decent chance for buying a secondary double bottom, because overall, the possibility that the Bank of England is going to raise rates is still stronger than it's not, and that should provide us at least a modicum of support, especially, and this is the key thing, if U.S. rates just can't rally next week. In many ways, this is probably going to be the single most important economic variable that we should all be watching for, which is the 10-year. And if the 10-year doesn't get up to 295, all of the anti-dollar trades will continue to work. And the beginning of the week is going to be a very big tell, because if the risk aversion flows still dominate, it's very likely that we're going to see 117 in the euro, 109 in dollar yen, and 133, 33.50 in pound dollar as the week begins to develop. So that's how the majors shape up. Wish you guys the best luck, the best trading. Boris, over and out.